Good day, ladies and gentlemen. Today we're taking a deep dive into the world of profit taking in stock trading. Knowing when and how to take profits is crucial to success when trading the markets. So let's get right into it. First up, we have the principle of defining clear profit targets. Having a set profit target helps us stay objective in our decision-making process, leaving us less room to fall victim to our emotions and leading us to close our positions early. I decide in advance how much profit I want from a trade and stick to it. For example, if I were to want a 15% profit target, I would sell a portion of my stocks once that target's hit. This method prevents emotional decision making and helps us lock in profits. Real quick guys, Moomoo is hosting a paper trading competition on their mobile app that's running until the 16th of November 2024. The top 3 winners globally get $10,000, $3,000 and $1,000 respectively of stock cash coupons. Regionally, there is a top 3 as well, which has $1,000, $500 and $200 worth of stock cash coupons. So guys, be sure to check that out. If you want to sign up, check out the link below. We're going to take a look at taking profits in stages, as this can be a real game changer. Instead of selling all your holdings at once, why not consider selling parts of your position incrementally? For example, I can opt to sell 25% of my shares once my initial profit target's met, and then another 25% if the stock continues to rise. If after I take profits, the stock starts trending in the wrong direction, I'll at least have locked in some profits and it'll be a lot harder to end up overall in a loss on the trade. The great thing about using Moomoo is that the brokerage is actually really cheap, so that this style of profit taking is super affordable for the average person. If you look at the table here, it shows the charges for the Moomoo platform of US 99 cents flat per trade for US stocks, and 3 Aussie dollars for any trades $10,000 or less for CHESS-sponsored ASX stocks, which is significantly cheaper than competitors like CompSec and Selfwealth. Next, we're going to take a look at trailing stops. These are kind of like a safety net. They automatically adjust as the stock price moves in your favor. This way, you don't have to keep managing your risk every day by updating your stop loss as the stock rises. Here in the Moomoo app, you can set your trailing stop at a certain percentage below the market price. For example, an 8% trailing stop would simply mean that if the stock drops 8% from its peak price, your shares are sold. This style of taking profits helps you manage risk quite effectively, whilst also locking in gains while giving your trade the room to grow. As we've discussed, taking profits in stages is helpful, but where should one begin to look at taking profits? Do we just pull a number out of thin air and decide that's where we should take profits? We can use technical analysis from our previous videos to define areas of resistance, and you can find these videos right here. We use resistance levels to determine where to begin taking profits. The simplest method, which also happens to be my favorite, is pivot points or horizontals. These levels demonstrate where the stock has previously struggled to push further to create new highs. More often than not, I find these levels to be a great place to begin taking profits, as we don't know if the stock will push past and break through this level. If the stock fails to break down, that's fine, we've taken some profits. And if the stock does break through, that's even better, as we still have some shares left to make money on the continued momentum. Next, we're going to take a look at monitoring market trends. Keeping an eye on broader market trends is crucial. When the market shows signs of a downturn, it might be time to start taking profits. We can take a look at the overall health of the market by looking at the XJO or the Oz 200 to see how it's trending, and factor this into our decision making for taking profits. We can dive even deeper and look into specific sectors. For example, if I own a gold mining stock, I can look at the price of gold to see if it's still trending upwards. I can also look at an ETF for gold, such as GDXY, which is a collection of gold stocks. By looking at that, I can see how the entire sector is looking. Now there is an ETF for just about everything. You need to find one, then just have a look on Google. There's an ETF for every sector, whether it's healthcare, technology, and even real estate. If you're a new user to Moomoo, there is up to 6.8% per annum cash interest on uninvested cash balances up to 80k for the first 30 days, and 10 free stocks with an eligible deposit, plus you also receive a brokerage free card worth $4,000 just by completing your first buy order. Click the link below and join Moomoo to receive these rewards. Before I sign off, guys, I just want to say the top 3 winners from that paper trading competition that I mentioned earlier with the highest returns globally will have their names displayed on the NASDAQ screen, which I think is kind of neat. And to celebrate Moomoo's collaboration with NASDAQ, each participant who signs up through the link below will receive free access to NASDAQ TotalView market data. Thanks for watching, guys, and let me know in the comments below how you take profits in your trades. And once again, thanks to Moomoo for supporting this content.